A real estate agent's ability to set realistic expectations with buyers and lenders can be the difference between a smooth closing and a stressful one. Miscommunication, unmet assumptions, and avoidable delays often stem from a lack of early clarity. This section equips agents with the tools and legal guidance necessary to manage all sides of the financing process effectively. Setting realistic expectations. Setting expectations early and clearly helps prevent surprises later in the transaction. This involves discussing loan processes, timelines, and potential obstacles up front with the buyer and lender. Key concepts to communicate. Pre-qualification versus pre-approval. Pre-qualification is a basic review of financials, often verbal and not verified. Pre-approval is a lender's written commitment, subject to underwriting and conditions. Statutory reference. Under AAC R428-1101B and C, an agent must not misrepresent or allow a client to rely on assumptions. Explaining that pre-approval is not a guarantee is a legal and ethical obligation. Loan documentation requirements. Buyers must provide pay stubs, W-2s, bank statements, and other verifiable income and asset documentation. These must often be updated throughout the process. Timeline expectations. Many conventional loans close within 30 days, but FHA VA loans often require 35-45 days. Title issues, appraisals, or underwriting questions may delay closing. Example. Scenario. A buyer wants to close in 21 days with an FHA loan. Agents should explain, because FHA loans involve government processing and appraisal reviews, we should prepare for closer to 35 days. Let's communicate that to the lender and listing agent early to align everyone's expectations. Appraisal and underwriting variables. Explain that appraisals might not meet contract price. Underwriting may raise conditions that delay funding, even late in escrow. Managing borrower expectations. Buyers often misunderstand what pre-approval entails and may feel blindsided by last-minute lender requests. Agents must help clients anticipate these touchpoints. Best practices for agents. Explain that pre-approval. Final approval. Underwriting still needs to approve the file after appraisal and re-verify employment and financials. Coach buyers on financial behavior. During escrow. No new credit cards, car loans, or job changes. No unexplained large deposits or missing documents. Statutory note. Under AAC R428-1101I, agents must use reasonable care to ensure that all material facts, including the impact of financial behavior on loan approval, are communicated. Keep clients updated. Regular check-ins reduce anxiety. Share lender updates as soon as they're received. Example. Tip to a buyer. Even if you're approved, the lender will need updated pay stubs, bank statements, or explanations about deposits. We'll help you stay ahead of those requests. Managing lender expectations. Lenders also rely on the agent to help keep the transaction on track. Keeping them informed avoids delays and preserves professionalism. Your role in supporting the lender. Provide a clean, complete contract package. Include HOA information, seller concessions, and all required addenda. Clearly note COE dates, contingencies, and response deadlines. Keep the lender in the loop on changes. Price reductions, repair credits, addenda, or date changes must be shared immediately. Example. If the seller agrees to a $5,000 credit for repairs, the lender must adjust the loan amount or net figures. Failing to notify them may delay final approval. Avoid making unrealistic commitments. Don't promise 15-day closes unless the lender has confirmed they can meet that deadline. Ask the lender. What third-party timelines, appraisal, title, verification of employment, may affect closing. Maintaining relationships with lenders. Strong lender relationships benefit the agent and client long-term. When you work as a collaborative team, your clients experience smoother transactions. How to build and keep great lender relationships. Respect their workflow. Understand. They often manage dozens of files. Keep your requests organized and complete. Be proactive, not reactive. Call early if there's a contract change or potential issue with the buyer. Maintain professionalism. Say thank you. Keep calm during problems. Provide feedback after closing. Work with trusted lenders. Recommend lenders who are communicative, ethical, and supportive of buyer timelines. Legal reminder. Under AAC R4 28 1101H, you may not act outside your area of competence. That includes trying to influence lender decisions or misrepresent lending timelines you don't control. Managing expectations is one of the most critical and overlooked parts of a successful real estate transaction. Buyers need clear, honest, and consistent communication. Lenders need timely information and professionalism. And agents must balance both roles while upholding their legal responsibilities. When in doubt, communicate more, not less. Be the calm voice that brings clarity and confidence to an otherwise stressful journey.